Good morning. We are looking at a strong repricing in Euro USD driven by a sell America trade that is crushing the dollar across the board. Technically, the signal was more clear on Tuesday. That is the opening on Monday, by the way. We broke down of what it appears to be some sort of bullish flag pattern, at least for me. Yeah, which confirmed the resumption of the uptrend. Since the open, this has been a vertical move driven by a specific shift, of course, in market sentiment that we already analyzed in articles and in videos over the week. With headlines, of course, have focused on Greenland since the weekend. Tuesday saw an intensification of the selling pressure. Why? Well, the start of Davos, which provided a platform for President Trump to double down on his tariff threats and signal to investors that the February 1st deadline is a real risk, not just a negotiation tactic. This realization, of course, that the de-escalation is unlikely triggered the second leg of dollar weakness. And here we go. We also got the Euro USD pumping hard higher, reaching a high of 117.67. I think it's up 1.6 this week alone, and it's just Wednesday morning. Obviously, that also crushed the US equities, right? Because it's a geopolitical risk, and sent gold towards 4,850, which of course was a much better performance than the Euro USD. But we analyze it a lot in our articles and videos. So jump over to have a look at our analysis. So let's measure this impulsive move. First of all, we're going to connect the first peak and the first trough. You're going to see that the 161.8 Fibonacci extension is what stopped us from going higher. And also at the same time, we got an RSI peak. Now, in Elliott Wave terms, guys, this is a wave 1 and a wave 2. And let me just put those down in paper, as we say. 1 and 2 and 3 and 4. And the fifth one is expected to begin when wave 4 finishes. Okay, so typically extensions go to the 1618. We did a little bit more here, but obviously not confirmed, right? And then the wave for correction ends at around the 100 Fibonacci. Now, what typically happens after that is a continuation to the upside in wave 5, while at the same time the RSI forms a divergence. This is a typical reaction. Then we see a reset, okay, and then further continuation to the upside. So that will be a larger wave 1, and then we'll get a larger wave 2, and then there you have it. You have a new wave 3, and here's how the cycle works. So this is a clear Elliott Wave behavior for me, and this is why we're looking at it. There is, of course, more ways than just one to look at the particular at a particular entry. Okay, so I was looking for this. Then we go. So another way is because we're looking now at 1 and 2, right? And we have the 117. This is a very strong psychological support. Of course, we need to remember that, right? Because we're trying to figure out now what is the wave 5 target, right? The wave 5 target will be, guys, 117.75. That's the 200%. And then above that, you have the 2272, which is 117.95. But for me, it looks like more of a case that because we already pretty much reached the 200 in wave 3, that we could actually head for the 180 handle. Okay. Now, the other way to do this, our entry will be 170 for wave 4, would be to measure the wave 2 and wave 3. This is the 38.2, and the 50% comes at 17.1. So it is a good support at 38.2. We're measuring the wave 3 correction, right, guys, now. And why we do this? Because we want to see how low this would go. But let me give you this. This is the guideline of alternation, because the initial pullback down to 0.236 on the first wave was very shallow, very shallow. Now, the second pullback in wave 3 is expected to be deep. Deep for a wave 3 means that it would go to the 50% perhaps. Okay, so 117. I doubt, although possible, and the last line of resort is the 0.618 at 116.85. The 170 is the one. So 117 becomes our entry point, guys. Okay, so if we're going to do a long position at the 0 point, and we'll put a stop loss just below the 61.8 because it's where it's invalidated. The impulsive move would be invalidated here pretty much, okay? Because a wave 3 cannot correct more than 61.8 of its own wave. So, and we'll be looking for a target up to the 0.18, 1.18, and this is for a great risk to reward ratio. That's why we're looking at this particular opportunity, because we are currently in the correction mode. Obviously, for those a little bit more brave, you can go ahead and try to enter at the bottom if you would like. You would keep the stop still there, and of course the initial, the not final, I would say, but one of the targets could be the top. I would, although again, as always, and I would suggest it's always been the case, try to have partial take profit levels. The previous peak would be the one, okay, and then you're looking at the 200 Fibonacci and beyond. Now, let me tell you something else that you can take into consideration. When wave 4 is in and you're going to have a final low for this particular territory, right? Because for now, the low is at 117.10, right? 170, if we assumed that we're going up high, we're not going to get another low, then we're going to use the net distance of the Fibonacci to find a potential target. So we go from the bottom all the way to the peak and then down to wave 4. And look at this. Our targets are the 1784, the 1807, and the 1830. So these are the three take profits, if that makes sense, if you want to use them. But this is the net distance, okay? Now, there is high possibility. Sometimes, of course, especially when you see big moves in wave 3 that extend beyond the 161.8 Fibonacci extension, right? In this particular case, although not confirmed because we have a big wick here that was left behind, then typically we extend even as high as the 100%, which in this case brings us up to 119. And I would be surprised if that's the case, but perhaps maybe not in the initial leg, because as I said before, we're probably looking at the first wave over here, okay, then the second wave, and then perhaps further continuation. Obviously, risks are always attached to not just this particular technical analysis and Elliott Wave sort of idea that we are presenting at the moment, but also we also have very short-term fundamental risks to take into consideration. One of the risks, of course, is what's happening in Davos. This is more of a geopolitical event, okay, macro event, and then you also have a macroeconomic event, and this is the US PCE, which is due tomorrow. A very important PCE data. This is a Fed's preferred measure of inflation. It is expected to hold steady at 2.8, but this is still high. A surprise higher still could distract this structure, okay, and perhaps drive a deeper correction, okay. But if they come as expected, the results, or even lower, then this will likely support a higher move for the dollar. So the plan is a bit simple this time around. We're looking to go long at the fourth wave, deep into 117, targeting 118, and perhaps even beyond. So let me know your thoughts of the Davos headlines and also this trade idea in the comments. Trade safe and take care.